Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BOC Aviation interim report. BOC Aviation Limited offers a diverse range of services to airlines and aircraft owners across the globe. These include direct operating leases, finance leases, sale and leaseback facilities, engine finance, leases, third-party asset management, aircraft, remarketing, technical management, debt financing. For airlines, lease management, services, aircraft sales. The company operates a fleet of owned, managed, and on-order aircraft, providing various financial solutions to its clients. The recent increase in BOC Aviation's stock price can be attributed to several key factors. Firstly, the company has demonstrated strong financial performance, with industry-leading EBIT margins above 30% in 2024 and a 6.13% revenue increase over 2023. Additionally, significant aircraft orders, such as the 50-jet deal with Boeing in March 2025, have signaled strong demand for BOC Aviation's leasing services and expanded its asset portfolio. Furthermore, positive analyst ratings from major financial institutions like HSBC, Citi, and DBS have contributed to investor confidence and stock price appreciation. These favorable ratings have been accompanied by increased target prices, with some analysts raising their targets to $10.75 or more. The growth of the global aircraft leasing market, projected to reach $565.1 billion by 2034, has also created a favorable environment for BOC Aviation's business. Overall, these positive developments have collectively contributed to an 8.42% increase in BOC Aviation's stock price over the past year, with periods of stronger growth within that timeframe. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The main contributors to revenue growth are the increase in delivery volume of aircraft, improved lease rates, and rising aircraft values. Additionally, factors such as lower oil prices, increased aircraft deliveries, and long-term U.S. dollar-denominated leases with airlines have also contributed to revenue growth. Key statistics include a 6% increase in total revenues and other income, a 36% increase in finance lease income, and an 8% increase in net gain on sale of aircraft. The commercial aviation industry has seen a 5% passenger traffic growth and a 3% cargo market demand growth, further supporting revenue growth. Revenue decline drivers. On the other hand, there are limited drivers of revenue decline mentioned in the report. However, it is noted that the interim dividend per share decreased by 26%, and net profit after tax declined by 26%. Net income for the company decreased by 26% between 2024 and 2025, dropping from $460 million to $342 million. This decline is evident in both the first half of 2024 and the first half of 2025. In contrast, profit margins showed a mixed performance. Core net profit after tax, NPAT, increased by 20%, indicating an improvement in profitability. The net lease yield also rose from 7% to 7.5%. However, the effective tax rate increased significantly, rising from 9.7% to 15.8%. This increase in taxes offset some of the gains in profit margins, resulting in a more nuanced picture of the company's financial performance. The company's financial performance indicates a mixed record of generating positive operating cash flow. While net operating cash flow is reported as $1 billion in some periods, the data from page 46 shows inconsistent results with $1,393,647 and $1,289,550 for 2025 and 2024 respectively. This inconsistency raises questions about the company's ability to consistently generate positive operating cash flow. The debt level of the company has undergone significant fluctuations over time. Initially, there was a notable increase in total liabilities from $18.69 billion to $19.07 billion, page 5. This trend continued with an increase of over $48 billion in debt financing, page 15, and a rise in gross debt by $299 million and net debt by $437 million, page 23. However, there were instances where the debt level decreased, such as from $2.61 billion to $1.79 billion, page 43, and from $58.7 million to $55.7 million, page 63. Regarding interest expenses, there was a notable increase of 2% due to higher debt levels, page 13. Additionally, interest expenses on loans and borrowings increased by $7,016, page 50. However, it's worth noting that interest expenses decreased for intermediate holding company and other related parties, page 73. In summary, the company's debt level has experienced significant changes over time, with both increases and decreases. The interest expenses have also fluctuated, but there was a notable increase of 2% due to higher debt levels. Regional performance overview. The financial summary reveals mixed results across various regions. The Americas region stood out as a top performer, increasing its market share from 22.7% to 27.7%. This significant growth earned it a performing well label. In contrast, the Chinese mainland, Hong Kong SAR, Macau SAR, and Taiwan region struggled, experiencing a decline in market share from 24.3% to 21.6%, which was labeled as performing poorly. The Asia-Pacific, excluding China, region saw a slight decrease in market share, ranging from 19.2% to 21.1%. Europe also experienced a minor decline, with its market share decreasing from 18.1% to 17.1%. Only the Middle East and Africa region remained unchanged, maintaining a steady market share of 9.7%. Management is optimistic about the company's outlook, expecting a similar number of new aircraft deliveries in the second half as in the first half. The commercial aviation industry is also expected to sustain improvement, with profits forecasted at $36 billion for IATA members in 2025. The company has made significant investments by placing its largest order for new aircraft in history, securing 70 Airbus A320neo family and 50 Boeing 737-8 aircraft. This move is expected to drive future growth and lock in a large asset base, with total aircraft deliveries valued at over $100 billion in 2025. The company is positioning itself for long-term success. The company has a history of paying dividends to its shareholders. According to financial records, a final dividend for 2024 was declared and paid, and an interim dividend for 2025 was proposed but not yet paid. Additionally, the company confirmed that it paid dividends in both 2023 and 2024. There is no mention of share buybacks in the provided information. That concludes the financial summary for BOC Aviation. Feel free to comment below, and I will be happy to answer them when possible.